Hello everyone, welcome to the Ichimoku Charts.com daily analysis for light sweet crude oil for Tuesday, April 23rd, 2013. Well, a continuation of the trend to the upside today, a candle that's made a higher high and a higher low. A very small white body candle, and in contrast to the size of the white body candle from the previous day, it is quite a very large reduction. This does raise some doubt about continuation of the trend to the upside, and it is a potential Japanese candlestick reversal pattern. It's a hanging man pattern, and here we have the prior uptrend, and at the end of the uptrend we see this small body with virtually no shadow and a largish shadow on the bottom of the candle. That's no shadow on the top of the body of the candle and a fairly large shadow on the bottom. This does suggest that there is potential for a change of trend, and we are looking for a lower high and a lower low. Only problem with this though is that we have the buyers closing with control of this market, and we did see the sellers lose commitment down below the $89 level. The large shadow represents upside price rejection, and as the market was interacting with 88 for the previous 3 consecutive trading days, there was upside price rejection, and this doesn't give us a lot of confidence in the potential change of trend. If we do see that change of trend, then there is a large zone of support that extends from 87 roughly down to 84, so very, very solid support down below. But the market will meet with some potentially strong resistance from the Tenkan-sen, the green line here. We can see as this current candle is developing that it is interacting with that line at the moment, the Tenkan-sen, and is being rejected from there. By the same token, 89 does have potential to act as support if this market does trend down from here, so possibility of this trend continuing to the upside. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend to the previous time the market was trending up, and here for the previous day's trading we saw the market close in a bullish manner up above the 100% level, and we're seeing some follow through today with this small white body candle. This does suggest that the market has potential to trade up to the 161.8% level that coincides with this area around the $90.50 level. That 161.8% is at $90.60. So very, very strong potential resistance there, and a possibility of a market trading up to there, and let's watch how the market reacts if it does trade up to that level. In terms of the Fibonacci retracement of this prior downtrend, and for the previous day's trading we saw the market interact with the 38.2%, closed in a bullish manner just up above there. We have seen follow through today with this small bodied candle. Potential for the market to trade up to the 50% level, which is trading at $90.36, within a zone around this $90.50 area. Very strong resistance up around there. Let's wait and see how the market reacts to that level if it does trade up to there. In terms of Ichimoku, obviously a bearish market in all 3 timeframes. The market's trading down below the cloud, so we have a bearish bias in the long-term timeframe. The market's also trading below the Kijun-sen, so bearish in the medium-term timeframe, but that Kijun-sen is pointing flat and price action is being attracted back towards there, so we do need to be aware of that. So there is a possibility that this trend could continue unless it meets some well-defined resistance, and at the moment there is potential for that to happen here around the Tenkan. And the market is also bearish in the short-term time frame by trading down below the Tenkan-sen. The check-out span here is below the corresponding price action, so it's confirming the negativity that we're seeing. So some mixed signals in terms of Ichimoku. Bearish market. We are looking for the market to rally, find resistance, and then sell off. Short-term dynamics aren't necessarily supporting the sellers. The buyers have closed with control. The sellers lost commitment down below 89 and down around the 88 level, but this is a potential Japanese candlestick reversal pattern, a hanging man, so we do need to watch for a potential lower high and lower low. But I do suggest that 89 is solid support, as is 88, and then if we do see that change of trend to the downside, we do have very, very strong support in a zone extending from roughly 87 down to 84.